The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Everybody stand up, reach in your back pocket or your purse and take out your wallet. You got to spend some money today, boys and girls. We're going to have our good friend Rich Anderson of Anderson Capital Management on this morning, and we've got some patterns completing that need our attention, and we'll cover those at 9:30. But you might have to spend a few bucks, risk a few bucks to make a few bucks, but that's basically how it goes. Yesterday, the bonds rallied over two handles from where we thought the buy was. We've now backed off to a perfect 61% retracement of that move down here near that special support at 171 again, so keep an eye on that. The same thing in gold. We rallied about $15 in gold, and then we backed off again. The 61% retracement in the gold is at 13.20. The first question that I've had is from several people have asked me about what it was like working for Drexel. I started for Drexel in March of 1976. Milken had started, I believe, in 1974 after he got out of Wharton. And the first day that I went in to the office, we were there at Rodeo in Wilshire. We had there were 24 brokers in the office. There was a Chinese broker, Adora Chan, still alive, doesn't trade anymore, of course, but she was there, and I was there. We were the only two non-Jewish people in the whole firm at that time. And so my first day, I was a little scared because I'd never worked for anybody as a broker, and so I was there, and it was like 6 o'clock in the morning. They gave me a deck to trade, which is about $5 million, which is equivalent to about $50 million at that time. And about 20 minutes after 6, Ty Gandrews, the guy who was the star of the Mod Squad, came in, and he was with one of his best friends, who was Jack Lemmon, the famous actor. And they came in and sat down and had the coffee in my office and chit-chatted. From that moment on, Ty Gandrews and I became very, very close. He pretty much adopted me almost. He lived about 12 miles away over in the San Fernando Valley in an area that was in a small canyon. There were 10 homes in there, and in that area, there were a whole bunch of actors. John Davidson lived there. Chuck Connors, if you remember him, as a rifleman, lived there. Mike Connors of Mannix, who was Ty Gandrews, one of Ty's best friends, lived there. And Juliet Prowse, the famous dancer, lived there. And Tim Conway, the famous comedian, lived there. So all those folks lived in that same area. In one area, it was a gated community, and that was really good. So anyway, that's how I got started, and then I would come in at about 5:30 every day. I'd work till 12. The bonds were the last thing to close. We didn't have S&P futures or anything like that, and bonds didn't actually start trading until I think about April or May of 1976, as I recall, but that's pretty much how it worked. You've asked me several times about, many times about some of my experiences, and I've had so many wonderful experiences there that it's hard to pin it down. But frankly, it is actually pretty easy. It wasn't during the time I was at Drexel. It was 20 years later. My youngest daughter had gotten out of school back east, and she was running marathons. She didn't get that from me, boys and girls, I can tell you that. But she had developed a giant cell tumor in her knee. It's not a cancerous tumor, but it's very, very painful. And the problem is that there's only about a handful of doctors that do this type of surgery. And the only ones that were available on the West Coast, there were 2 in San Francisco and 3 in Los Angeles, and it was about a 1-year wait to get on. And so I called my old boss at Drexel and I told him, I need to see one of these 3 doctors. And when you were at Drexel worked on the favor system. If you did somebody for something, they didn't want money. They never wanted money. You just owed them a favor, or you owed them a favor. And that's how it worked. And it worked very well over the years. And I knew that they knew the right people. And sure enough, my boss came back to me and he said, Larry, he said, you call Tig. He says he can get this done for you because, he's tight with Kirk Kerkorian, who was Mr. Las Vegas at the time, because he had bought everything that, Howard Hughes had over there. It now belonged to the Tresenda Corporation. And so, Kirk was the the big daddy rabbit, so to speak. And in about 2 hours later, Tig called me back and he said, your appointment is going to be tomorrow at 1 o'clock at the USC Medical Center. We went down and the doctor, took a look at her and he said, we're going to do the operation tomorrow. He said, it's $25,000 cash. We don't take insurance. And I said, okay, we'll get this done. And sure enough, we went in the next day. She was there just one day and we got out. And when I went to pay the bill, there was no bill. Mr. Kerkorian picked it up for me, paid for the whole thing. And this was one of the best times I had in Drexel, so that was fun. Anyway, let's take a look at the very first chart that I posted in here. We have a sad situation. Nicky Jones passed away recently. Nicky Jones and Billy Jones started Lambert Gann Publishing. They bought the works of the Lambert Corporation. This was a stuff from W.D. Gann. And they lived up in Pomeroy, Washington. And Nicky just passed away. Her son Cody is going to pick up the gauntlet and continue on with the business. Billy died of kidney failure many years ago. I first met him in 1978 when they came into my office in Drexel and were asking me about the Gartley book, and they went to the Gartley family and got permission to reprint the book, and that's why the Gartley book has been reprinted over these years. Instead of costing $1,500 like it did in 1937, I think you can get it for like $100 and a quarter, is what it runs right now. But this first chart that I posted in here comes from one of their contributors, and it's basically a Gann type fellow who does trading and does timing using the Gann method. And as you can see, all these little arrows that are there, are pretty good with timing, and some work, some don't. But as you can see, we have the same pattern, and he's looking at July the 15th, as a major spot. We've had something very unusual happening here in the markets. In one particular market that I think we really need to pay attention to, because this is it is really an outlier event, and we'll take a look at it right now. It is the IWM, which is the ETF for the Russell Small Cap, the Russell 2000. And if you look at that box on the right, that's the right shoulder that we have. I couldn't get the whole chart on because what I wanted to highlight was the last 8 days. This market actually topped on July the 15th and has never gone any higher, even though we were higher 9 days in a row in the Dow Jones Industrial average. But this one has been at the same level for 8 days in a row, right at the 78% retracement of the high from May 19th of 2000. So anyway, that's enough history. We're going to take a little break. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we are taking a little gander here at the old silver contract. As you can see here, I've marked those two little red boxes, as you can see, the one on July 8th and the one we had yesterday. We went down and we took out the highs of July 8th, the lows of July 8th by a half a cent. It was a half a cent, which means there was virtually no selling down there. We then rallied about 50 cents from that level, and now we're backing off a little bit. I frankly like the gold market much better, but for investment purposes, and you want to put things away, silver seems okay to me. I don't know if it's going to stay above this 1927 level, but if we go below 1927 now, folks, it would really most probably mean that this high that we made, back here just a couple of weeks ago, at that 382 and 1.618 expansions that we've talked about many times, which was 1377 in the gold and 2140 in the silver. That would be the high for probably the next several months. That doesn't mean it's not good longer term, but that just means that we're watching it as something to hold your feet to the fire, because if you get below 1927 in silver, I wouldn't want to be long for trading purposes. For buying the bullion coins, we've been recommending buying those bullion coins from the time silver hit $13, and I still think you still buy them, because I think one of these days we're going to walk in here and there's going to be a game changer of some kind, and it's going to be a different ball game. We're starting to see interest rates rise when they should be going down, and everybody in the whole world has been long bonds, for a very, very long time. And if we break that perfect 61% retracement that we made yesterday, which is down around that 170.04, 05 level. The exact number, I believe, was 07. We got to 02. But if we break below that, boy, that's going to be a really negative sign, because after a 2-point rally in bonds, which was not even a 382 retracement, this would mean a lot of weakness coming in. Remember, these markets, they don't always do the way the people that are talking about them do, including myself and everybody else. But you've got to pay attention to the technicals. So I would watch that, very, very closely. That's something that I think is, very, very important, to be watching. Now, there's another one here that is really getting close. If you like Fibonacci and you like the patterns and stuff, there's one that is really setting up nicely here, and that's in the September crude oil contract. We're back near that 44 level again. This is going from August to September futures, but we have 4 ABCD patterns coming in here at around $44 a barrel, and we also have a 3 drive pattern coming there, and we have a 1.618 expansion. We have a 61% contraction. There's a lot of numbers here at 44. Below 44 in September crude would not be good. So the risk on this, if you were going to do something like this, the margin is around $3,000, and you're trading a $44,000 contract. So you'd figure you'd have to risk about 60 points or $600. But the profit potential on this could easily be, similar to what you had in bonds yesterday, where, bonds rallied, $2,000 after hitting that 618 number. So it's not just the 618 numbers. There's other numbers that are coming together, also at the same time. So those are the ones that I think are important. I'm not going to do anything with the rest of the grain markets, because I want to wait till Rich comes on, because he's got some really good things to talk about today, and also I want to be able to give you folks an idea of some of the patterns that I'm looking at that point. We had a request here to take a quick look here at the DAX index. This is a daily chart. As you can see, we've had lower tops here ever since April the 22nd. We just completed a 135 pattern, which is the pattern that was popularized by Roy Longstreet and his son Bill. We've also been up in the same area now for 3 or 4 days. And, the most amazing one to me is the fact that the Russell has been here for 7 or 8 days, at the same high. Hard to believe. And not only that, but we have not taken out the high in the New York Stock Exchange Index, and that was within 9 points of the number that Tom O'Brien gave us on Monday, which was 10,819. The high so far this week is 10,810. Of course, we got a whole day of trading to finish the week here, but we'll get a pretty good idea, come Monday, which direction we're going to be going here. But it's only been the S&P 500 and the Dow, and of course the NASDAQ made a 1.27 expansion. It didn't make new highs, but it made a 1.27 expansion, off of the high from July the 8th. And so that would tell us that we're most probably completing that move also. So this was the first time that my wife Sarah has ever seen a convention, and she watched the whole thing and kept score, and it was really interesting to watch her reaction. But when it was all over and we had heard the speeches and stuff, she was listening to the channel, and she was saying, gee, I didn't see it that way. And I said, why don't you change from CNN to Fox? And she switched to Fox, and it was a totally different perspective. It was like people were on Mars watching it on CNN, and the people on at Fox were watching it on Venus or whatever. But they were really different. You could certainly see the politics that goes on, in the news announcements. And I'll tell you one thing, this guy that just lost his job at Fox, Roger Ailes, who's supposed to be a genius with broadcasting, he might be a genius with broadcasting, but boy, that guy, he must have really liked to have risk exposure. That's about the only thing that see what's going on. So we'll see anyway. Okay. The next question someone asked us about was the grain markets, and we're going to cover that when we have Rich Anderson on here, which will be coming up at the break. But get your wallet out, folks. We got a lot of stuff happening in all the grain markets, and this is a moment of truth. I mean, there's you don't have to. This is it. There is no ifs, ands, or buts about it. It's going to be right at the spot where we're going to be really, really close, to have a spot to either to go long in here. We'll take a look at it. I do have one chart here I wanted to mention. I'm doing a special paper for Paula Douglas. It's some of us traders at Newmark Mark Douglas really well. We're doing a tribute to Mark Douglas. It's going to be a video and some charts and stuff. But one of Mark's favorite trading systems was to look at the first hour's range in Treasury bonds. He loved trading bonds because he worked very closely with Robert St. John, Tom Baldwin, and Charlie. What was Charlie's last name? Oh, my God. Anyway, these guys were huge traders, and they came out to Pismo Beach and visited us and stuff. So it was always a lot of fun when they were in the trading house. But what he did was he looked at that early morning range in bonds, and whenever you went above the 78% retracement of that range, Mark would go long, and he would put his stop below the previous bar, which would be 30 minutes before that, and then it would have a run. That's what we looked at here in the bonds. As you can see, it had a pretty big run in that, during the time. So we're going to see what's going on, and we'll go on to see what's happening here. Okay, we'll have Rich Anderson on at the break, so live every day in an attitude.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on of Anderson Capital Management. Rich, are you there?
Yep. Hi, Larry. Good morning.
Good morning. Rich, I know you're heavily in politics sometime. What did you think of the convention and the speech last night? Any comments?
Well, if any news is good news, then, there were several fumbles or missteps along the way during the session. And, but it keeps you in the Twitter sphere. And I guess that's good. I was not impressed.
The biggest thing was how his family was so impressive. Gosh, I think
his daughter,
just like when I look at your daughters, Rich, I know who you are. I can see, what you and Lisa have done to your kids. And when I saw those 5 kids, I said, this guy, he spent a lot of time on those kids. To make them to turn out that way. So let's get to the markets. We're going to start out here. We've had a question about potash. And do you have any? I mean, this stock has been going down for forever, and that's related to fertilizer and stuff, as I recall, isn't it?
Right. I think it got a bump. I don't trade stocks. I don't follow them. Just random information. I think it got a bump here a week or so ago on the idea that they were going to close a couple production facilities. But the idea is that carryover on corn's going from 10% and the weather, that we were any hope of weather problems, dissipated as forecasts continued to verify more rain and the heat didn't turn out to be as hot as possible. The carryout on corn is going to, as it's going now with this crop, and corn's July crop, so it's basically made once you get through pollination, unless you have a big freeze, and that just doesn't happen very often. You're going to have 17-18% carryover. The farmers will probably plant 3.5% less acres of corn next year, and that'll mean less usage of potash. And with the prices below the cost of production, farmer's going to look for every possible way he can to reduce his, amount of money that's going into the ground. So I would have a hard time getting excited about that based on the demand.
We have a caller on the line. They didn't tell me the name. So are you there, sir?
It's Steve.
Hi, Steve. Well, you've got Rich Anderson on the line. Why don't you go ahead and ask him a question?
Yeah, Rich, I was asking about potash and then also Mosaic, and the idea they're coming out with earnings, I think, the next week or two. Next week for sure for potash, and then I think the week after is Mosaic. And like you were saying, the outlook is not real bright. Of course, their stocks have been decimated.
Right.
And they have a high dividend yield, and I'm thinking that if they come out with a report and say they're going to be cutting dividends, that might lead to a capitulation and maybe a final move down in those. And that might be a time to, as a long-term play, taking a look at them from that standpoint, and I just wanted your thoughts on that type of thing.
Well, it's all about these markets are traded these days on momentum, whether it be the commodities or the stocks. That's what these guys are doing. It looks to me like the value area for potash is someplace between 8 and 12. Gets down there, it's probably going to be pretty interesting. And on a chart like this, you'd probably want to use a log chart rather than a regular chart. But if I was going to buy it, I'd be looking at 8 to 12. I'd probably be looking at the acreage numbers will come out in March, and that'll be probably the most negative time for usage because I'm anticipating, given the corn being at below the cost of production, that there will be some shift of acres, which we'd anticipate this year and didn't happen, out of corn into other things. And corn is one of the major users of potash. And so if you get into that end of that first quarter and you're down at 8, the lows back in 05, 06 were in the $8 area, and the highs were in the 12. So I'm looking at those old highs to be support. So I would think the $12 area, strictly as a technician, And fundamentally, I would think it'd be March, you know. And interest rates, by the way, I was just reading something this morning. Our interest rates, when you compare us to the consumer price index and stuff, are actually cheaper than Japan, which has negative interest rates. I thought that was an interesting point of view. So it's all relative. You have to look at the total picture of a country when you're looking at interest rates and things like that.
Right.
But strictly as a technician, $8 it looks like great value. 12.5 is the old highs back in 05. Corn made its lows, by the way, with everything else in early 2009, and then you started to get up and go, and that's you know, corn's going to make its lows. Then if we have weather problems next year, you know, all of a sudden a 15 to 19% carryover can go down to 10, and then corn lights it up, and then the potash will start to anticipate the 2018 demand rather than looking at the reduction in demand that's going to be for next year. That's what I think. But I don't trade stocks. You know, I'm a farmer.
Okay.
And so I'm thinking about it from my cost of production and how am I going to reduce the amount of money I'm putting into the ground next spring if it's below the cost of production.
Okay, and Mosaic, like you say, you don't trade stocks, so you don't.
Right. I would feel the same way about that stock. I think any stock, as long as the basic operating and it's not over leveraged, you know, you buy them on dips when they're at value levels and things do improve. Not just like the energy stocks, you know, when they got hammered. As long as they're not so over leveraged, they're going to have to sell out or go out of business, you know, such as some of the coal companies did. That's opportunity. That's the way I view the stock market.
And that's the way I've been looking at it. I've been just waiting and waiting and waiting. And so in your estimation, it's got a ways to go yet to the downside. But at some point in time, that could be a pretty good buy then at that point. But. Right,
and when you're looking at, I don't know what the dividend is on it, but when you're looking at dividend yields, you're also look at the dividend plus buybacks, because the total kicker is the amount that they're buying back plus their dividend. I think we saw one of the companies like Apple announce a $5 billion buyback. You know, that's really like a dividend when they're buying back stock because it's reducing shares.
Yeah, they've got high dividends, and I kind of figured that those will be cut at some point because it's not a market price that seems right. It seems to me that they would cut those dividends and save that cash for
to stay in business.
Yeah, exactly. So
hey, we got a break coming up, gentlemen. So. Thank you for calling in, Steve. We really appreciate it.
Well, thank you.
Stay with us, Rich.
No problem.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks. And Rich, I've posted a chart of October cattle in the room because you mentioned to us 2 weeks ago when you were on that if they broke that 108 level, they'd be heading lower, and it looks like they're going to make at least 104. Any comment here on the cattle market?
It's you know, that it's all about money flow, and it's risk off, and guys are just getting out of the market. You know, just getting out of the way. 108 was my target on the front month, and that's the August, and the August did get below 108 yesterday. It got down to 107.10. It's 107.87 right now. The Octobers could easily go $3-4 under the August, so 104. You know, August could stay where they're at, and they could be 104. That, you know, that's the way spreads work. You know, pick a number, 102, 104, someplace in there.
Yeah. What's the cost of production on a cow now, Rich?
It keeps fluctuating, and I don't have them. I don't have them up in front of me right now. But if you're going to be losing money if you're putting stuff on feed right now. The feeder cattle are still relatively high. Corn's come down, but you know, ideally you'd like to have $15 to $20 a head of profit at least before you start to hedge, and it's hard to be a hedger when you're locking in a loss.
Okay, let's switch over to the corn market, Rich, because we've got one of our favorite patterns coming in now. We have a butterfly pattern happening in the long-term over the last 5.5 weeks in December corn down here at 336. I saw we just hit that just a few minutes ago. We have a 3 drive to a bottom pattern and the butterfly pattern expansion at 1.27. Rich, is there any chance we can get a nickel rally in corn?
Oh yeah, I don't doubt that you can get a nickel rally, but the thing is, the 7-day forecast, you know, corn is a July crop, and by that, once you get through pollination, it's hard to hurt it. The daily moisture needs peak in the middle of July, and then they start to go down. And our 7-day forecast has areas that need rain having 1 to 2.5 inches. These hot weather temperatures didn't get nearly as hot for nearly as long as what they had hoped a couple weeks ago. That caused that popcorn rally. We're going to catch and hold in here because it'll be at a value level. That isn't to say we can't go lower and harvest. But, yeah, I would just trade it technically. I noticed yesterday we had inside days in all the grain markets, and that often precedes a change in trend. So, And you think about it, there's probably some people that will not be necessarily excited about staying short over the long weekend, over a weekend versus overnight, because weather forecasts can change over the weekend.
I see that the November beans got down to the 990 level this morning, and that's a long way. That's more than a $1.50 a bushel from where they made their highs up at 1157. So are they anywhere near a value level? Because we're seeing that same three-drive pattern in soybeans like we are in corn.
Well, soybeans are an August crop, and so I think the 9 area level probably is more towards a value level, and I would think that would have a better chance of, having a reason to bounce more so than corn, because the crop is still in the development stage, and August is what makes the soybean crop. The other market that you haven't mentioned, if you look at a long-term continuation chart, there's a 16-year trend line here on this wheat.
Yes, I know. And wheat made a low earlier in the week. I think it was 2 days ago. We had a little bit of a rally, and it's not making new lows. We're making new lows in corn and also in beans this morning. So that could be something that's interesting. We have a question about the gold market, Rich. We went down and came very close to testing the $1,300 an ounce level. We got to 1310. Any feeling in the metals? Are you hearing anything, or do you know anything?
Well, the two things: option expirations on Tuesday. On Tuesday, the 26th, and so the gold and silver. All markets tend to give yourself a little thrill ride into option expiration. That's because of gamma guys that have to adjust their deltas, and anyway, it's the big traders, they're the delta neutral, and then the market moves 20 cents. Now they got to buy some more. If it's going down, they got to sell some more. And that's what causes these gyrations. I think after Tuesday and we get these options cleared off the board, it'll probably have a lot more opportunity. They were a little disappointed that Draghi didn't do more in his speech on what he was going to do with the Europeans. They think in 3 weeks he'll come out with another speech, and basically they've got to redefine what they're allowed to buy because they're running out of things they can buy. The Japanese, they eventually start buying the Japanese ETFs of the stocks. And it's printing and creating all this money. You're going to see the India, the China, they're going to be buyers under the market, and opportunities will exist to own this stuff. And but you trade it technically. I think the areas that you had identified in the gold looked awful interesting to me. They haven't quite gotten there. The silver yesterday made a lower low than it had a couple weeks ago by 1 cent. That shows you that they're looking for stops, found none, and buyers stepped in. And so I'm looking for option expiration to kind of clear the decks and give us an opportunity. And
that'll be on Tuesday.
Tuesday, 26th.
Okay, that's very interesting. Hold on here. I believe we might have another. We've got 2 minutes to go, Rich. Just quickly, any feeling on the stock market? In fact, we've had virtually no volatility up here. The ranges have, melted away to nothing. Are you having any information that you could share with us on the stock indices?
Well, the stock market's going to be nervous about the election between now and November. The two candidates will have different views on business. But the bottom line is that we're the best house in a bad neighborhood, and there's no good place to put your money. And, bonds are, if all of a sudden interest rates start to change, the dividends that we were talking about for potash and these other stocks, if interest rates were to go up, which it doesn't look like they're going to go up for some time, but if they were, all of a sudden there's a lot of risk there. What the most interesting thing is the volume just isn't there on this rally, and so then maybe they need to back up a little bit. Who
knows? Yeah. Well, listen, I want to thank you for being on, and we'll have you on in another couple of weeks, and have a wonderful weekend, and give the family my regards.
All right. Thanks, Larry. You have a good weekend.
You bet.
Bye-bye.
That was Rich Anderson of Anderson Capital Management. He certainly, being a farmer himself, they raise cattle and sorghum and wheat there in South Dakota, so he knows the stuff. So anyway, this is what we're looking at, folks. We are, right at this level here at 336 in the corn and whether it holds or not. You can be a farmer here for without risking very much at all. So keep an eye on the corn. What you'd like to see it to do today would be to, try to close higher on the day, which would be a perfect spot to look at it at 342 a bushel. That's about 6 cents from where it is right now, and then your risk would be 6 cents. Or you also could buy it right here at the 335.5, 336 level, and your risk would still be 6 cents. So you become a farmer for 6 cents or $300. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And yesterday we were looking at gold around that 13.15 level when it made a little 61% pullback, and now I've posted into the room. You'll see that gold is also making another 61% pullback after the $15 rally. $15 rally that we had last night. Now, $15 doesn't sound like much, but that's $1,500 in gold, and it trades has great fluidity. I mean, there's all kinds of volatility and liquidity in the gold market. So you can easily put your stops in, and they'll be protected without any trouble. Keep an eye, folks. We are within just a few pennies now of the 61% retracement in the crude oil market at $44 a barrel. We're trading at $44.17 right now. So watch that level very closely. It's going to be breaking down, making new lows. In fact, it's doing that right now. What you want to do is to see if there's going to be a lot of selling once it breaks below 44, if in fact it does. But 44.04 is the exact number. So far we've been to 44.15, so we want to sort of keep an eye on that one. The Treasury bonds went down to the 61% retracement, hit it pretty much spot on at 170.29, and now we're a little above that now at 170.106. So these are some of the things we're looking at. The stock market, as I mentioned, and Rich Anderson from Anderson Capital Management also mentioned, there is just no volume up here, folks. There's no interest. So I don't know if it's going to change overnight or what's going to happen to it, but this market is hanging up here, like a chandelier built on glue. And I think you got to be very, very careful from these levels, because the New York Stock Exchange Index didn't even come close to making a new high. It only made a 78% retracement, and that is the true market. It's not the 30 Dow stocks or the 25, or so NASDAQ stocks in the NASDAQ 100, or the 100 or so stocks that are in the S&P 500. So keep in mind that's what the real market is doing. So we have a wonderful weekend, and we'll see you all at the beginning of the week. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.